G'day. It's Stefan Angelini coming to you from my car today for your market update. Let's look at what we're getting into today. We're going to look at economic data to 20th of July, by the way. We're going to look at some economic data, some key economic indicators about Australia, just to improve your knowledge a little bit. We're going to look at housing and the build to rent market and exactly what's going on in that build to rent market, how that might be a way to battle Australia's housing shortage, but it probably won't be enough. How there's one developer converting offices to apartments, which is quite interesting. We're going to talk about Com Games, the 2026 Com Games more specifically, and how Dan Andrews has recently said we ain't doing it. Whether it's a good decision or bad decision, not really sure. And then finally, going to finish off with talking about Russia's economy and some reasons it's starting to struggle. So thank you for listening. If you're a regular listener, if you want to listen to the full podcast, please head on over to Real Wealth with Stefan Angelini. If you're staying on the line, guess what? Here's a disclaimer. But if you're not staying on the line, don't worry about it. So if you just want any general information, this is perfect for you. But if you're looking for personal advice, please don't consider this as personal advice. If you want any personal advice, go and consult your licensed financial advisor. So first off, let's kick it off by looking at economic data. What are some economic indicators around Australia? We have inflation at 7%. Our cash rate is currently 4.1%. Our population figure, we have 25.99 million people in Australia. Our business confidence is down. Our consumer confidence is still sitting at 79. Our unemployment rate is at 3.6%, and our unemployment growth is 3.4%. So unemployment rate's still down compared to where, or still in the target range, I could say, but still very, very low. Our wage growth is 3.7%. Now, that is actually up compared to where it was before. Our average weekly earnings in Australia is $1,378 per week, and our savings ratio of that is an average of 3.7%. So we don't save a heap of what we earn. We are a big spending economy. So that's some key economic indicators. Inflation's still high. Government has a band of a target of 2 to 3% for inflation. So that's going to be their main target to get that down. In order to get that down, they want to, the RBA or the Reserve Bank of Australia normally want to increase the cash rate. Now you'll see our population still grow over the next few years as well. So that $26 million figure, or 25.99, will continue to increase because we've got a lot of migration as well as we've just got the natural growth of Australia. Finally, let's get into build to rent and the Australia's housing affordability? No, housing supply crisis. So yes, we've got an affordability crisis, being that houses are expensive to buy, they're also expensive to rent, but we just don't have enough stock coming onto the market. To give you some more information on this, our population will increase by about 2.35 million people, and there will be about 500,000 people come to Melbourne alone over that same period. Now, build to rent market will provide a little bit of stock, maybe 30,000 stock in Melbourne or 50,000 pieces of stock in Australia, but you would have your general houses should provide about 1.04 million new homes in Australia. But 1.04 plus 30 grand makes it 1.07. We've got 2.3 million people coming in. How are we going to meet that shortfall? So there's a lot of developers out there not supplying new houses because it's just too expensive. So we're in a real conundrum. Melbourne is leading the charge on the build to rent. We have about 30,000 build to rent homes coming on the market quite soon, whereas other states are lagging behind. So it's good for Melbourne doing a lot of stuff, but still there's going to have to be something else to fix this housing supply shortage, because rents are just going to keep going through the roof. And most likely if it's demand and supply, that means prices are still going to go through the roof. So let's look at what else someone else is doing. So this great man, Tim Gurner, like him or hate him, he's doing amazing things in the property space. He's turning offices into apartments. So there's a big issue with offices. Obviously, built to rent, COVID made people available to work from home. So he's basically come in and said, well, why don't we just take this office building and turn it into apartments? We need more housing supply for residential. There's less offices in demand and a lot of vacant offices. So maybe we could do that. So he's doing it in Sydney CBD. So an apartment near Barangaroo, he bought it for $200 million. It's 18 levels, converting that into apartments. That we'll see how that goes. If this works, this is going to be amazing. So this is really going to change the landscape. And this is one way to quickly, I guess, fix that housing supply shortage from the residential side. He recently did it. He bought an old Novotel site in St Kilda in Melbourne. It's now called the St Moritz. It's on the beach. That has become residential apartments, but that was more of a knockdown and rebuild as opposed to just a refit. So going to see interesting space to watch. We'll see what he tries to do. Finally, Com Games. This is going to get people really angry. So if you didn't know, Com Games is going to come to Melbourne in 2026. And that is not happening anymore. So Dan Andrews has pulled the pin. He said, nah, not worth the money. So this 12-day event was mainly going to be based in regional Vic. So think of Bendigo, Ballarat, Shepparton, those kinds of towns. The initial budget was $2.5 billion. It's already blown out to $7 billion, the budget. So he's just said, nah, we're scrapping it. Basically, we're pressing pause. We're not doing anything like that. He said, I can't take money out of hospitals and schools to fund an event that is 3 times the cost of what was budgeted for last year. It's because cost of construction has gone up quite dramatically and they need to construct a lot more things. Therefore, they just don't have the money. So look, good call in terms of managing the budget and finally not just doing everything they promise. Our net debt is now $171 billion, or it's forecast to reach $171 billion by June 2027. So it's kind of stop spending. But there's other things that he's dedicated to that are just not conducive to actually making money, making Melbourne a very great place to live, such as all the different roads they're building, the East-West link. What else are there? There's the airport rail. All those things that are costing a lot of money will make Melbourne a better place long term, but won't support regional towns and anything like that in the short term. So, and don't forget, what about all the sporting people that need to practice and have made a career of aiming for things like the Commonwealth Games? So this is going to be a real conundrum. 2022 in Birmingham, there was a lot of medals there. There's a lot of games there. That was great. And now basically the Commonwealth Games Committee is just sitting there going, well, you pulled this on us last minute. We've got 3 years to prepare and we can't do it. And also the poor sporting people that need to get involved here. I'm not sure whether or not Commonwealth Games in 2026 is going to be around. So anyway, let's see what happens here because I don't know. He might take it back on, but I doubt he will. Finally, let's get into Russia. So Russia's economy is starting to wither. Let me tell you why. There's a weakening ruble. So over the last month, the ruble has weakened more than 6.8%, and it's down more than 35% in the last year. So that means weaker dollar, less spending power for Russians as they go offshore. The current account balance has dropped 93%. So for the April to June quarter, the country posted a current account surplus of $5.4 billion. So what does the country make? Making a 93% plunge from $76 billion last year. So that's massive. So over $72 billion and $5 billion for a big economy like Russia is not great. And that's going to make them struggle. So basically, Moscow has been unable to secure imports and that its profits from energy exports are failing to prop up the economy like they did before. So some real issues emerging there. Car sales have gone down. That's how you know people aren't spending money. Roughly 100,000 cars were sold every single month across Russia, but with a lack of supply, increasing costs, low consumer sentiments of people not having money, not having confidence, cars aren't selling. And as you can see, economy is starting to wither. Finally, immigration. People moving out of Russia to countries like Uzbekistan. They've seen 400,000 people flee Russia. And also, there's been a flow of money into neighboring countries and to their banks, such as Armenia, Georgia, and Kazakhstan. They're not normally financial hubs, but there's been a lot of money going into their bank accounts. So that's what's happening over there. Russia's starting to wither a little bit, and that's an effect of war and sanctions and long-term effects. So here's what it is. Anyway, that's me done for the 20th of July. Thank you very much for listening. I'll see you soon. Go off and have a great day and happy investing. Cheers.